Okay, so it is Thursday, January 22nd, 2026. And if you were watching the market open this morning, you saw Abbott Laboratories just get hammered.
Oh, it was a bloodbath. The stock dropped, what, over 10% right at the bell?
Exactly. And if you just saw that headline, you'd think the whole company was, coming apart at the seams.
You'd assume some catastrophic failure for sure.
Right. But we've got the earnings call transcript here, the press release, the slide deck, and the story is, well, it's a lot more interesting than that. It's not a collapse.
No, it's not. It feels like we're watching a collision
A collision of what?
of two completely different economies. I mean, on one hand, you have the consumer goods side, the things you buy every day, like baby formula, and that part of the economy just hit a brick wall.
And on the other hand?
You have the high-tech medical world, cutting-edge heart valves, biowearables, that sort of thing, and that business is just absolutely on fire.
Yeah. So it's a tale of two companies inside one stock symbol. And that's our mission for this deep dive, to figure out how a company can miss its revenue target by over $340 million while also, setting records in medical tech.
And to understand what that means for the rest of 2026.
Let's get the big numbers out of the way first. Just lay the groundwork.
Oh, good idea. So the adjusted EPS, earnings per share, that came in at $1.50.
Which was right on the money, wasn't it?
Exactly what Wall Street expected, 12% growth. So let's be clear. The company is profitable. They're making money.
The profits aren't what tanked the stock. It was the top line, the revenue.
That's the number that spooked everyone. It came in at $11.46 billion.
When the street was looking for $11.8 billion.
That is a big miss. I mean, missing by hundreds of millions usually tells you that demand is just drying up.
But then their guidance for 2026 is projecting growth of, 6.5% to 7.5%?
Right. So they're basically telling investors, hey, don't panic. This is a blip. The growth is still there.
Okay, so let's figure out what caused the blip.
Yeah.
Looking at the breakdown, the problem child is pretty obvious. It's the nutrition division.
Yeah. Similac, Ensure, Pedialyte, that whole segment was down nearly 9% in Q4.
That's a huge drop for what you'd call a consumer staple.
It is. I mean, people don't just stop buying baby formula, right?
I would think not. You can put up buying a new car, but you have to feed your kids. So what happened?
Well, there were two main things. One was kind of a one-off issue. They lost a major WIC contract in the U.S.
The government assistance program.
Exactly. That hurts, but, contracts come and go. The second thing, though, that is a massive red flag for the whole economy.
This is where the CEO, Robert Ford, he used a word that kind of caught my attention. He talked about a spiral.
This is the key takeaway. Think about the last few years. Costs went up for everyone, right? Shipping, ingredients, labor, everything.
So, like every other company, they raise prices. We've all seen it at the grocery store.
Of course. And for a long time, it worked. We complained, but we paid the higher prices. But Ford was really honest on the call. He said in Q4, they finally hit the wall. Meaning the consumer is tapped out. They raised the price of, say, Similac one too many times, and people just stopped buying as much.
They became increasingly price sensitive.
That's the quote, and that's where the spiral he mentioned comes in. It's a dangerous loop.
Explain that.
Okay, so you raise prices to cover your costs, but then your volume drops because people buy less.
Okay.
But if your volume drops, your factories are running less efficiently, which means your cost to make each individual can of formula actually goes up.
Because your fixed costs are spread over fewer units. I get it.
Precisely. So the temptation is to raise prices again to cover that new higher cost. And you can see how that becomes a death spiral. You chase margins until you have no customers left.
That sounds terrifying for a business.
It is. And Ford said, point blank, you cannot raise price to cover cost anymore. He said they have to get the volume back.
So how do you do that? Slash prices?
Sort of. They're doing price and promotion initiatives. Coupon sales, that kind of thing. But they're also getting back to innovation.
He did mention that R&D had been on the back burner in that division.
Yeah, and you can understand why. After the formula shortages a few years ago, their entire focus was just make product, keep the shelves from going bare.
Survival mode.
Total survival mode. But now that the supply chain is stable, they have to give people a new reason to buy. So they're launching 8 new products in the next year.
8? That's a lot for a nutrition business.
It's aggressive, but they have to do it. Still, they were clear this isn't an overnight fix. They expect the first half of 2026 to still be pretty challenged for nutrition. The growth they hope comes back in the second half.
Okay, so nutrition is the anchor. It's the part of the business living in our tough inflationary reality. But if we walk out of the grocery store and into the hospital, the story just completely changes.
It's night and day. Medical devices grew 10.5%. Reported growth was actually over 12%. It's a rocket ship.
This really is that collision you were talking about. People are pinching pennies on formula, but spending on high-tech healthcare seems unstoppable.
It's incredibly resilient. And the big growth driver for Abbott right now is in a field called electrophysiology.
Okay, break that down for us. What exactly is electrophysiology?
It's all about the heart's electrical wiring. Specifically, it's about treating conditions like atrial fibrillation or AFib, where the heart's rhythm goes haywire.
And the treatment for that has usually been ablation, right? Where they either burn or freeze the problem tissue.
Exactly. You use radiofrequency to burn or cryoablation to freeze, but the whole field is shifting to a new technology called PFA.
Pulsed field ablation. This was all over the transcript. Why is PFA such a big deal?
It's about safety and speed. See, when you burn or freeze tissue, that thermal energy can spread. You risk damaging nearby structures like the esophagus.
Which is not good.
Not good at all. PFA is different. It uses these really short, high-energy electrical pulses. Think of them like tiny, targeted lightning strikes.
Inside your heart.
Yep. And the magic is that these pulses are tuned to affect heart muscle cells, but leave the surrounding nerve and esophageal tissue alone, so it's safer and it's much, much faster.
And Abbott's got a new system for this.
They do. They just got FDA approval in December for the Volt PFA system. And maybe even more important, they got European approval for something called the Tactiflex Duo.
Tactiflex Duo. It sounds like something you'd shave with.
Hey, yeah. But the Duo part is the key. It's a single catheter that lets a doctor use both the old-school burning method and the new PFA method.
Wait, why would they want both? If PFA is so great, why not just use that?
Because every patient's heart is different. Sometimes you need the broad, fast treatment of PFA. Other times you might need the deep, focused lesion you can only get from burning. This gives the doctor a full toolbox in one device.
So they don't have to pull one catheter out and put another one in mid-procedure.
Exactly. It's a huge workflow improvement. And speaking of workflow, there was another point Ford made about the Volt system that is a really big deal for hospitals.
What was that?
Anesthesia. Because PFA is so much faster and less traumatic to the tissue, they're finding they can do these procedures with just deep sedation.
Not general anesthesia.
Right. And that is a massive economic benefit for a hospital. No anesthesiologist, shorter recovery time, you can turn over the operating room much faster.
You can do more procedures in a day.
More procedures, more revenue. It's why there's such a huge demand for these new systems.
Okay, so the heart's electrical system is a boomtown. What about the plumbing? The structural heart side of the business?
Also booming. Double-digit growth. This is things like MutraClip and Navitor for repairing and replacing heart valves. But the product I'd really watch here is called Amulet.
Amulet, that's for the left atrial appendage, the LAA.
Correct. It's this little pouch on the heart where in AFib patients, blood can pool and form clots.
And if one of those clots gets loose, it can cause a stroke.
The #1 cause of stroke in AFib patients. The standard treatment is blood thinners for life. The Amulet is a small device that just seals that pouch off permanently. No more pouch, no more clots.
And no more blood thinners.
That's the goal. They are finishing a huge clinical trial called Catalyst, designed to prove that the Amulet is superior to blood thinners. If that data is positive, the market for this is just enormous.
Okay, let's move from the heart to diabetes care. You can't talk about Abbott without talking about the Libre CGM system.
The juggernaut. It just passed $7.5 billion in sales for 2025. It literally grows by $1 billion a year.
But the interesting thing now is who they're selling it to. It used to just be for people with type 1 diabetes.
Right, the intensive insulin users. They've dominated that market, but now the focus is expanding to a much, much larger group, people with type 2 diabetes who are not on insulin.
There was a stat on the call that made my jaw drop. 6 million people in the U.S. on these newer diabetes drugs, like SGLT2 inhibitors.
And only 1 million of them are using a CGM.
That is a 5 million person untapped market. But let me play devil's advocate. If I'm on a pill, my blood sugar is generally under control, why do I need a sensor on my arm 24/7?
That is the multi-billion-dollar question they have to answer, and their pitch is all about behavior modification. It's one thing to take a pill every morning. It's another thing to see your glucose spike in real time on your phone right after you eat a piece of cake.
It's that immediate feedback loop.
It creates accountability. The goal is to get primary care doctors to prescribe these, to make it as routine as a cholesterol test.
And they're not stopping with just glucose, right? They filed for a new Dual sensor.
Yes, glucose and ketones.
Ketones, most people associate that with the keto diet.
And that's not who this is for. In diabetes, high ketones are a huge red flag for a condition called diabetic ketoacidosis, or DKA. It's a medical emergency. Your blood becomes acidic.
So this is a safety device.
It's a huge safety net. But it's also a brilliant strategic move. It's their way to attack the insulin pump market, which has historically been dominated by their competitors. Adding ketone monitoring is a feature nobody else has. It gives them a real edge.
All right, let's touch on diagnostics. This is another segment like nutrition that was down about 3.5%.
Yeah, and it's almost entirely due to COVID testing revenue disappearing. It's down to like $89 million. It's basically become a rounding error.
So if you pull that out,
If you pull out COVID and some pricing issues in China, the core lab business is actually growing at a healthy 7%.
so the business is fine. But the big story in diagnostics isn't the Q4 number, it's the acquisition of Exact Sciences.
This is the massive bet on the future. Exact Sciences is the company that makes Cologuard.
The colon cancer test in a box.
The very same. But Abbott isn't just buying them for that one test. They're buying them for their leadership position in cancer screening.
Robert Ford had a great analogy for this on the call. He said he wants cancer screening to be like getting a lipid panel.
That's the vision. Right now, we mostly find cancer when it's already a problem. You feel a lump, you have symptoms. He wants to shift to a world of multi-cancer early detection, where, as part of your annual physical, a simple blood test screens for dozens of cancers.
I'm hunting for cancer to farming for it.
Exactly. The market for that, if they can get the science and the reimbursement right, is, well, it's basically every adult on the planet.
It's a huge vision.
Yep.
Okay, last segment really quick. The sleeper hit of the company, Established Pharmaceuticals.
EPD. It sounds boring. It's branded generic drugs in emerging markets, but this division is a rock. It grew 7% for the 5th year in a row.
That kind of consistency in places like Latin America and India is just incredible.
It's the ballast for the whole company. It just churns out cash, which lets them go and make these big bets like buying Exact Sciences.
Okay, so let's tie it all together. 2025 was a year of, as they called it, disciplined execution. They hit their profit numbers even with the revenue miss.
And 2026 is shaping up to be a transition year. Job 1 is to fix that pricing spiral in nutrition. Job 2 is to integrate this massive cancer diagnostics business. But all the while, the medtech engine is just firing on all cylinders.
It really does come back to that split personality we talked about at the top. The consumer wallet is hurting. People are balking at the price of baby formula.
But the healthcare system and patients are still willing to pay a premium for innovation that saves or improves lives.
Abbott is betting that, at the end of the day, you might switch to a cheaper brand of cereal, but you're not going to look for a discount heart valve.
That is the entire bet right there. Innovation will win out over inflation.
Which leaves us with a really interesting thought to chew on. We are moving so fast toward a world where our bodies have a check engine light.
Yeah, real-time sensors for glucose, for ketones, blood tests that can spot cancer before you even know it's there. It's the digitalization of our own biology.
Exactly. But the technology seems to be moving faster than the economics. In a world where a family have to think twice about buying a can of formula, who is actually going to be able to afford the check engine light?
That's the multi-billion, maybe trillion-dollar question, isn't it? The innovation is here, the business model to pay for it all. That's very much a work in progress.
A fascinating look inside a company at the crossroads of two economies. That's all for this deep dive into Abbott's Q4 2025. Thanks for listening.